Why do you think Bitcoin seemed to start a new rally based on just ETF chatter?
Yeah, well, I will say I think the Bitcoin market is looking for anything to rally on. I think there's definitely a high demand for what we call hopium. so, so at the time, I'm a conduit for what would be one of the biggest bits of hopium there is, which is an ETF approval. If an ETF is approved and multiple ETFs are approved, the main way to look at this is ETF is a bridge to advisor assets. Advisors are typically a little older, and they manage money for wealthy boomers, right? Boomers have well over half the money in the U.S. They own half the stock market. They're loaded, basically. And so these advisors look after their money, and the advisors love ETFs. It's their preferred vehicle in which to do anything, whether it's stocks, bonds, gold. They love the ETF. It just fits in their plumbing. It's easy, it's cheap, it's tax efficient. And so putting Bitcoin in that wrapper all of a sudden just sort of opens up another portal for potential money. So these advisors manage $30 trillion. That's a lot of money. Now, so even if like a fraction of 1% were to go into these ETFs, that's a couple hundred billion. So that's the potential here. So I get it. The hopium is, I think, merited. And the big companies involved, like BlackRock and Fidelity, who have filings, as well as like smaller companies like ARK, Van Eck, probably missing some people, Bitwise. It's everything from big behemoths to more indie, local, native. You know, Galaxy has one with Invesco that's filed. So all of these companies have massive sales forces, and they're interested in this because they could probably earn a little more fee in a Bitcoin ETF right now, and it's tough to compete with Vanguard in stocks and bonds. So everybody sees an opportunity here. I think the crypto crowd sees an opportunity to get boomer assets. I think the asset managers see opportunity to get a little fee. Again, it won't be a lot. The ETFs will be way cheaper to trade than Coinbase and those kind of places, but there'll be more of a fee than charging 0.03% competing with Vanguard for like an S&P 500 ETF. And then I think the boomers who are interested in this exposure but don't want to mess with some kind of wallet, remembering like 12 words for the rest of their life, God forbid they lose it, you know, that kind of stress, I want no part of it. I understand. They would now have a very easy, accessible, simple, one click of a button way to get exposure. So I think this just solves a lot. It helps a lot. It's a win-win. It seems like only additive. And that's what is going on here. So the stakes are high. It's been a 10-year saga, as you mentioned. And who will win, right? There's probably only room for one or two stud ETFs in this category. But, you know, many will survive. They'll be in the middle class. A couple will probably close. But that's another question, is the race itself. But anyway, right now, we're probably about 10 weeks out-ish from these being approved and launched, according to our calculations. That would put them early in 2024. We'll obviously amend those as we go, but that's where we stand. So we're kind of in the home stretch. If you look at 10 years and then you consider 10 weeks, this would be like the last 2% of this story, right? This is the home stretch of a 10-year saga. So it's occupied a lot of my brain, probably too much. You know, I lose my mind on occasion. And I think it's rallying off of this because of all of those implications.